Hey everyone, welcome back to the channel. In today's video, we're diving into a very interesting topic. You've probably heard the saying, the first $100,000 is the hardest to make. But why is that? And what happens when your portfolio hits that milestone? Why do we often see a significant increase in value once you cross that $100,000 mark? Let's break it down. Before we jump into the reasons, let's first talk about portfolio growth. When you start investing, it's common for your portfolio to grow slowly, especially in the beginning. Small gains compound, and that's great, but early on, those gains might feel insignificant. As your portfolio grows, the effect of compounding starts to become more noticeable. But this doesn't happen right away. Now, why is the $100,000 milestone important? Well, there are several reasons behind this sudden growth after hitting this number, and we're going to break them down one by one. Reason 1. Compounding returns become more effective. First up, compounding returns. Compounding is essentially the process where your returns start earning returns. This means with every gain, your base amount grows, which leads to even bigger returns. When your portfolio reaches $100,000, the compounded returns from your investments start to really kick in. Let's say you're earning 8% annually. On a smaller portfolio, 8% doesn't seem like much. But once you're working with $100,000, that 8% is $8,000. And the next year, your returns on $108,000 will be higher. The higher your portfolio value, the more powerful compounding becomes. Reason 2. Increased investment opportunities. Another reason portfolios often grow faster after hitting $100,000 is because you now have access to better investment opportunities. Bigger portfolios allow you to diversify more, which reduces risk and opens up doors for higher yielding investments. With more capital, you can buy into growth stocks, real estate, or even specialized funds that require higher minimum investments. In short, you're no longer limited to small investments, and this can make a big difference in your overall returns. Reason 3. Confidence in the market. Now let's talk about confidence. The closer you get to your first $100,000, the more confidence you gain as an investor. This allows you to make bolder decisions and, over time, take advantage of market fluctuations with more strategic buys. Once you've seen your portfolio grow and you've weathered the ups and downs, it's easier to be patient and let your investments mature. Confidence doesn't just affect your decision-making. It also gives you the mental strength to stick with long-term growth strategies. And this long-term approach is often what yields the most impressive results. Reason 4. Enhanced cash flow. Another factor that drives your portfolio growth after $100,000 is enhanced cash flow. As your investments grow, you may start to see higher passive income from dividends, rental income, or interest payments from your bonds. This extra income can be reinvested, which accelerates your portfolio's growth even further. For example, let's say you earn $10,000 annually in dividends from a diversified portfolio of stocks and bonds. You can reinvest that $10,000 and continue compounding your wealth without needing to add more of your own money. Reason 5. Behavioral bias and the momentum effect. Finally, let's talk about a psychological factor, behavioral bias. Once your portfolio reaches a significant milestone like $100,000, you start to experience something called the momentum effect. This is where you're more likely to make decisions based on positive past performance rather than objective analysis. When people see a portfolio growing, there's a tendency to believe that it will keep going up. This can lead to more investments and more confidence in the market, creating a self-fulfilling cycle of growth. So the momentum effect plays a key role in why portfolios can go up after reaching that $100,000 threshold. Conclusion. So there you have it. There are several reasons why portfolios tend to go up after hitting that $100,000 mark. From compounding returns to better investment opportunities, more cash flow, and even psychological factors, it all plays a role in accelerating growth. The key takeaway here is that once you reach that milestone, your investments can start to really snowball. So stay patient, stay disciplined, and let compounding do its magic. If you found this video helpful, don't forget to like, share, and subscribe for more content like this. Also, drop your thoughts in the comments below. How has your portfolio grown, and what's your next financial milestone? See you in the next one.